Time for the big three. 3 stocks, 3 charts, 3 trades. Glad you are with us. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Charles Moon, Senior Market Strategist of Equities at Prosper Trading Academy. Thank you both for being here. Before we get to Snowflake, Charles, just how are you feeling about the markets? Had a couple of days of selling. We'll have NVIDIA, we'll have Fed minutes. Your thoughts?
Yeah, it certainly seems like we're teetering on what NVIDIA is going to do off of their earnings. We talk about sky high expectations, especially after this run up. I feel that even if they, meet or exceed numbers, unless they're doing it on the scale of what they've done on the last 2 earnings reports, there may be a lot of disappointments of profit taking, what they would say a quick correction. The markets overall are starting to show some weakness. We haven't seen it since really the very beginning of this year. We're starting to see a trend reversal sign at the peak, and it's not a surprise, and certainly not a surprise that we're seeing more risk off going into this highly anticipated earnings report. So, the FOMC minutes, I'm not too concerned with. It's pretty evident that the Fed members have spoken their minds and, relatively speaking, kind of gave guidance to the markets on what they're looking for and what they're expecting. So we're still kind of having to deal with the CPI reports, but I think a lot hinges on NVIDIA here in the near term.
Oh, yeah. I mean, look at some of the big moves we're seeing. I mean, Palo Alto today, which is selling off 26%. Some of the reactions have been huge. That being said, Snowflake is the first name that you are taking a look at here today. It hit a recent high of 237. 1 year, it's up almost 40%. Needham puts a price target of 265 and a buy rating. Tell me how you're feeling about Snowflake today.
Yeah, I actually expected them to be a little bit weaker. I knew that, usually the cybersecurity and cloud sector go hand in hand. So seeing how elevated Palo Alto was and how far they came down and really corrected their price in such a short period, I actually expected Snow to be testing on this 203 level that I'm looking at closely. So we'll have to wait and see. I still don't want to be a buyer just yet. I'd like to be a buyer at a lower scale, right around that 203, 205 price range. That's where I'm looking for a strong pivot. If we hold on that level, perfect. I like the rebound right back to this 220 level, perhaps even as back as high as 235. I don't think this rebound, unless the markets go absolutely bonkers to the upside here, to really race back to new 52-week highs. But there's a lot to like about Snow, both in the near and long term. The trend has been strong. They have a huge buyback that they have to fulfill by 2025. It just seems like this is a smart dip to rip idea here.
So wait for a little bit of a pullback and then you buy it. How are you feeling, Ben, about this chart?
Well, I can understand the mindset there, Nicole, because we have seen some weakness. It is on the trajectory lower right now, but I think take out 215 and you reverse a bit of a longer-term trend we've been seeing for months. So let's just begin first and foremost with the short-term candle chart. I got a 5-minute look at price activity and the move lower here. You can see in shares of SNOW from 237 down to 211 recently. And again, on a 5-minute candle chart, in this instance, a pretty well-defined trend lower. You can see, and I've identified migration of value to the downside. Bears remain in charge as long as we remain below 218. And the reason I say that is because we're currently balancing around 214. So value is being established at this new lower level. And as long as we hold below the most recent area of value relative to the one we're currently forming, to me, it looks like, again, we're in a bit of a downtrend. Now, the possibility that we're in a larger area of value at this lower level is definitely present, and in that instance, you'd be looking at 232. But I got a little bit more granular, a little bit more fine-tooth combed on this one because it's a 5-minute candle chart. Now, here's where I think you could take a step back a little bit. And as I mentioned, 215 is significant. Look at this chart. Obviously, trend up, right? Very well defined, what the bulls were looking for when we were trading down around 180. And we're going all the way back to, we're talking the beginning of January. But look what started to happen as of recent. We've got a 15-minute candle chart here, and 2 things that jump out at me on this chart. One, we've got a very well-defined double bottom down here, right? You can see where stock bottomed out. We bounced around 190, migration of value to the upside, and then look what happened. A bit of a double top formed here around this 237 level. We bounced around 228 in the most recent area prior to the one that we were currently forming, 215. So we just got below that right now. We are at a make or break point here right now. So again, I can understand why Charles is taking a bit of a step back on this one. He mentioned 203, 205, a key area. Taking a look here, look, that coincides with your 50-day moving average. You got RSI, which is coming off a bit here, but was supportive of the most recent move up. So this could be, again, potentially setting up for a buy opportunity. But 215, again, I think is that key level that I'm watching right now. Below that, it does start to show some signs of weakness.
Okay, and so he's waiting for that pullback. See if you can actually get that. If there are signs of weakness, this could work for you. Final thoughts on Snowflake, and then we'll get to CrowdStrike, Charles.
Yeah, and again, we're highly dependent on the overall market conditions themselves, but I really do believe this is one of those names that we have to kind of scoop back. And I definitely would be treating this a lot more short term with the market conditions getting a little bit shakier here. There's nothing wrong with getting in and out of the markets for pretty good profits at a buy low, sell high opportunity. You know, this is at these levels, especially how elevated things are. I'm looking for lower risk opportunities with greater upside. And this is where I'm kind of targeting that 205, 203 range.
Yeah. Okay. When we take a look at CrowdStrike, you can see it's getting hit pretty hard today, down 9.5%, and that's in sympathy with what we saw from Palo Alto. What kind of opportunities do you see for trading CrowdStrike today?
Yeah, so I was really targeting a pretty wide range, right around this 282 to 275. We actually got down to 273, which was in relation to like the closing price in the low of January 17th. And that randomly, that little spike low is what's providing the support for today. Crowd has been racing back off of the lows. This is exactly what I would want to see on a big gap down. It's moving sympathetically with Palo Alto, but you know, if you look at the analysts' outlooks on Crowd, they've had a bunch of price targets raised with reiteration of buy ratings. So it's really beloved by Wall Street. And I think this may be a one-off. This is one of those opportunities that you don't really get too often in a name that is just screaming to the upside. And this has been screaming for more than just 2024. It's been going on for a full year. So this is one of those snapback buys I like. Look for the dip, straight rally. I think it's going to probably run up to around 310, may fill the gap close to around 325. And after that, you know, it's a coin flip. I don't know if it'll go up any higher, but, you know, those are pretty big gains in a short period of time. And that's all I'm looking for, to be in and out.
Oh, okay. So a quick sort of trade idea here. Your thoughts, Ben, when you take a look at this chart?
Well, in many ways, this chart, CRWD, is exactly what I was just talking about in terms of the significant level associated with snow in that 215 area, right? Crowd's actually already taken out that area. We'll get to when we look at the more intermediate chart. But let's begin first and foremost, similarly as we did with CRWD and the move lower here that we're seeing, and the trend environment to the downside. I'm sorry, I said CRWD. I meant similarly to snow. On the 5-minute candle chart, you can see a very well-defined trend lower. Again, these are 5-minute candles, so we're not going to put too much weight into this, but easily identifiable migration of value to the downside. Bears remain in charge as long as we're holding below 320. I say that because it looks like we're starting to balance here, form something a bit overlapping and rotation around 290, so we're going to reference that last area, and that's, again, about $30 above where we're trading right now. Taking a look here, a step back, I want to show you what's going on as we look at, again, similar pattern as what we were saying the bulls should be a bit concerned about in terms of snow around 215. Take a look here, a 30-minute candle chart, and look what's going on here. We saw a very well-defined trend playing out. The move back below 295, though, brings an end to that bull run from the beginning of January. We were down around 244 all the way up to 338, and why do I say that 295 was key? Because look, when we were balancing around 320, we had a false breakout to 344. Still holding that range though, right? So not anything to be too concerned about for the bulls, but the second we took out the middle of the range that we were in prior to this area that we formed at this upper level, yeah, then all of a sudden we're kind of taking back areas that were established on the way up, and that's not what the bulls wanted to see. So again, trend up invalidated with that move below 295. Let me show you what's going on, a bit of a longer term chart here. look at this one. You can see a well-defined trend to the upside, bottom left to top right, but another one that was invalidated as of recent. This was with the move back below 300 here. That was significant. It brings an end to this longer-term bull run. From the beginning of 2023, stock was down around 100, all the way again up to 338 here. Nicole, not what the bulls want to see across multiple time frames here. The 5-minute candle trending lower, and then you see those two key areas on the more intermediate and this longer-term chart getting taken out.
All right, thank you for that. Appreciate it. Great charts, Ben. Really, those look great and tell the really big story. Charles, final thought on that name.
Yeah, I don't really necessarily disagree with Ben in these situations. Short-term trends have been getting weak, and certainly the breakdown is of concern. You know, Palo Alto is widely viewed as a leader of this industry, of this sector, and certainly them being down nearly 100 points is ringing a lot of alarms on a lot of these stocks, but you see them rebounding back very nicely. CrowdStrike, Fortinet. And so when we see them rebound, there's certainly a lot of demand. And again, if Wall Street continues to like these names, as long as there's no downgrades, I fully expect at least a short-term bounce, and then we'll see what happens.
Right. Last but not least, Roku really has been out of favor. Now you have obviously possible more competition along the way. Tell me a little bit about Roku.
Yeah, the stock has seen a huge flight of investors taking profits since the peak, right around 109s. And, you know, this is almost like a two-part play in this scenario. Number one is really riding on that Walmart news. Walmart becoming the immediate competitor. You know, this is now not Roku, not just dealing with Amazon, who is always viewed as a big competitor, but also you're adding Walmart into this equation with their Vizio buyout. And so this is a name that I certainly see breaking down pretty significantly. I saw that Roku got a buy rating today, but very ill effect. It's slightly down at this moment. I'm actually looking for a rally somewhere around $70 to $72. $72 is that little gap fill here. 70 is that psychological level. And I want to see if sellers start jumping in. If they do, I think they're going to drive this down to the lower gap fill right around $60. It's right around 59.70. And from there, if we actually start seeing the stock hold and pivot, that's where I would look to actually cash out and look to reverse it right back up to the $67 to $70 level. So this is something that's going to be very fluid. It seems right now that the short sellers are really looking to press the stock price down to fill that major gap. And, you know, once that gap gets filled, we have to see if they start taking profits and buyers start jumping in. And if that's going to be the case, this is a great buy low with great upside opportunity as well.
All right, so another buy low, maybe with the upside opportunity, though we did talk about that competitive landscape. I mean, it's been beaten down. Ben, take a look at the charts, please.
Sure has. Let's do it to it in a very similar fashion as we did in terms of working our way through the more granular to the bigger picture time frame, and really tells a great story here. Taking a look here at shares of Roku, first and foremost, lower 5-minute candle chart queued up. Very easily identifiable, right? Just over the last few days, going back to the middle of last week, end of last week, I should say. And again, a very short-term look at some of the price activity we've seen, but easily identifiable migration of value to the downside, currently balancing, forming a value at this lower level, horizontal, rotational, very random, not a lot of conviction, but zero rejection because we're still holding below 73. So that was the area that we established into the end of last week, beginning of this week before we broke down. And again, top left, bottom right. I mean, there's multiple ways of describing it, but the 5-minute candle chart here is not what the bulls were looking for, that's for sure, nor is the 1-hour candle chart, because as we take a look here, you're going to notice again that, well, look, you can see high conviction breakout to the downside as we transition from a horizontal to a vertical phase. This is in line with the trend that's been playing out on this 30-minute candle chart going all the way back to, we're talking beginning December. Stock was trading up around 109. You can see it balanced around 102. That breakout occurs below that range that we had been in, the vertical phase, transition again into horizontal, rotational, very much random, not a lot of conviction. And then look at this, that high conviction phase. And even as I look at this, you can see couple little areas where I think if you pulled out like a 5-minute candle chart, you'd see some pause and consolidation around there. Again, very supportive of this bearish narrative that we're seeing here. The move lower on this chart here, easily identifiable, and again, not what the bulls want to see. Take a look here one more time at a longer term chart, and this is a daily candle chart. We're going all the way back to the end of 2020. Look at this, Nicole, Charles. Weakness across the board. Couple things that stand out. We've got a double top up around 500, so that was sort of the upper extreme of this range that we formed on the way down. Easily identifiable areas of value that formed at lower and lower levels. Look, we're breaking through 75, so the double top around 500, migration of value lower from 435.4 to 75, back below 75, opens up a door for a retest of the 2022 lows. We're talking still a ways to go here, but yeah, another chart here, 3 time frames, 5. I think it was a 30-minute candle chart we looked at, and now, again, a daily that this is not what the bulls were hoping for, that's for sure. Those that have been long Roku have been struggling.
All right, thank you for that, and all those charts, and going way back on them as well to give us more perspective. Charles Moon, final thoughts, please.
Yeah, this is looking very similar to last July, August in the Qs, where we started having a little bit of a breakdown for a few months, and then we went on this really kind of hellacious rally. I'm not saying that we're going to see something similar, but we have to be really cautious of the NASDAQ and the SPY losing their 50-day moving averages, because that could actually start triggering a little bit of a pullback in risk and profit taking, some risk off movement. So it's certainly going to be a dip to buy, but we're just not sure when this dip's going to slow down. And that's really where I'm throwing a little bit of caution in the wind. And we've been somewhat programmed in 2024 to buy any pullbacks. We have one steep down day, and all of a sudden we rally for 2-3 days, we recover and then some. I'm not sure that we're going to be in that same modus here going forward, at least for the next month or so.
Okay, well, we'll watch for that, because there has been obviously a lot of volatility, some anticipation, and for example, a down week last week, a couple of down days now. Charles Moon, Prosper Trading Academy, Ben Lichtenstein, thank you both for the big 3 today. We had Snowflake, CrowdStrike, and also Roku.